Getty Images Gary Cohn. During his tenure as director of the White House National Economic Council, President Donald Trump's former top economic advisor on Tuesday tied recent stock market jitters to fresh uncertainty on Wall Street over U.S. economic policy. "I think people are concerned that the economic policies of Washington are not as clear this year as they were last year," Gary Cohn said on CNBC, in his first television interview since leaving his White House post in early March. In 2017, the stock market was up over 20% while tax cuts were enacted, said the former director of the National Economic Council. "This year we have earnings growth up over 20% and the stock market is flat," he said. After rising above 26,000 in early February, the Dow Jones Industrial Average (DJIA) 0.01% has fallen back to 24,350 in Tuesday trading. This reflects some investor worry about rising commodity price inflation, particularly as steel and aluminum prices move higher because of the recent tariffs, he said. "You are starting to see a little of those inflation worries trickle in," Cohn said. Also read, "Evidence of higher inflation is popping up everywhere. Here are the latest warnings." Cohn said he wasn't worried about an inflation outbreak. "I don't think we have runaway interest rates in the United States," he said. "There was a lot of hype when the 10-year went through 3%, he said. "The sun came up in the east and set in the west and we are back below 3%, he said. After briefing topping 3%, the Treasury 10-year note yield TMUBMUSD 10Y, 0.86%, has slipped to 2.979% in Tuesday trading. Instead of runaway yields, Cohn forecast some flattening of the yield curve. Read, "Here's what tax reform, so far, has meant for the stock market and the economy." Investors are also confused about the corporate earnings, thinking the impact of the Trump tax cuts on corporate balance sheets was just a one-off, Cohn said. "We are just starting to see taxes affect corporate earnings," Cohn said. "It will take time for companies to get new capital expenditures off the ground," he added. Cohn said he was pretty bullish on the economy right now. Employment data continues to be strong but wage growth is slow and this will allow the Fed to take a more moderate approach to raising interest rates.